Welcome everyone to LeapMeet 38 September 2021 TradeLog review and interactive Q&A session at the end of it. So if you have any questions, please feel free to write it in the chat or save it so you can ask us at the end of it. If you have any questions while I'm speaking, just raise your hand or put it in the chat and I'll stop and let you ask your questions. So let's get started. Basically, the whole purpose of doing these meetings and this LeapMeet is to go over the month we have had, the trades we took, what worked, what didn't work. This is how you can figure out what mistakes you made or which areas you need to improve upon as a trader. What went right, what went wrong. I'm sure if you guys, any of you, if you're on any team, especially in tech industry, this is a trend where they do the retrospective at the end of like quarter or a sprint or something like that, where you analyze yourself and your work and figure out how you can get better. So this is what we do at the end of every month to go over our trade log. And we highly encourage everyone to keep track of every single trade that you took, because if you can't go back and look at the trades you have taken so far, mistakes you have made, then how are you going to improve upon it? You're going to take a trade and you're going to forget about it. Like, how many of you remember the trades you took in like first couple of weeks of the month? Barely anybody. I don't, because I took like, based on trade log that I'm seeing, I took about 70 trades this month, and it's obvious that I'm not going to remember my trades from first 2 weeks or from last month or the month before that. I keep trade log. I have my trade log that I publicly share for like entire year almost now, but I have had it since probably third year or second year of my trading journey. So I have about like 5 years worth of trade logs saved in my computer, and I still go back and look at it. Like when market reminds me of a similar condition that I have seen before, I go back to my trade log around that time and see what was the mistake that I made during that time and how I can avoid it this time around. So it's very important that you keep track of every single trade you take, and most people don't realize that for most people it's just additional work that they have to do, but most people don't understand the importance of this work that I'm asking you to do or suggesting you to do, because it's very important, and you will realize it. And especially if you want to be a trader and maybe eventually be a full-time trader, but even if you want to be like a part-time trader for years, this exercise will help you get better a little bit at a time. Because like I said, you don't remember trades you took in first 2 weeks of this month, then you're probably not going to remember the mistakes you made in first 2 weeks of this month. So if you don't remember your mistakes, how are you going to correct it? And how are you going to be a better trader or improve upon your mistakes and not make those mistakes again and again? And you know how they say, like, if you keep doing what you have been doing, you will keep getting the same results every single time. So if you keep making the same mistakes, then you will keep getting the same results every single time. So how are you going to avoid that? This is one way to avoid doing the same thing and same mistakes over and over again. So this is why I stress this point. I even put it in the rules that we have to follow. And I see a lot of people don't follow it. They just don't want to do the work. They don't want to put in this extra 5-10 minutes a day that it takes to just enter your trades and notes into an Excel spreadsheet or even Notepad. They just don't want to do it. And I highly encourage you that you do it. If you want to stay in this game for a longer period of time, this is something that will improve you as a trader in a long run. Trust me on that. I have seen the results and I have seen the effects of it firsthand. And that is why I'm stressing this point so much. Now, let's take a look at our the market that we had this month. So let me share a different screen. All right, can you guys see my screen? Let's see. So this is where September started, around this point, and pretty much entire month was a downtrend, as you can see. We did see a little bit of bounce here, but other than that, pretty much entire month has been down. So from this is September 1st, we did some consolidation for first week, and then this is second week, it went down. Third week, it went down, and then we saw a bounce off of 100-day SMA that we called pretty accurately. And then last week, it just, everything pretty much started crashing until the last day where we saw a little bit of bounce, and the 100-day SMA was reclaimed. So not a great month trading wise and trading environment wise. Overall market going down, a lot of choppiness, a lot of buys and sell. That was like, as you can see, it's like not clear direction in a sense that every single time it sold off, like within 2 or 3 days, it bounced back, or even the same day bounced back right away. So no clear direction. But if you look at the entire month, the overall trend is down. Now, what are we, unless we see a reclamation of this 100-day SMA, it's going to be hard for market to bounce back off here. But if it does that going into next week, then we can see a new trend. And usually last quarter of the market, holiday season, market is usually very good for trading. But we sell sheet every single time. It's a little bit different. Nobody, but that has been the trend. Whereas you can compare that to August. From 1st August, we pretty much saw overall trend is up. And from this point, September overall trend is down, and we closed even below where we started in August. So August was a great month for us, but and this one, September was tough to trade. But as you guys saw, and we did this exercise the other day as well, like if you follow levels, if you follow trends, if you follow relative strength, taking 1 or 2 good trades where you turn profit is fairly, I'm not going to say easy, but achievable. Doesn't matter what kind of market we have. So that exercise we did, I believe we did it on this huge red day candle where everything was tanking, and we turned profit. We took about what, 5 trades, I believe, based on all of your recommendation and my suggestion. And then we combined those two, the levels, the reasoning, and all 5 worked on a red day. Can you believe that? And that worked. It's because the reasoning was there, the levels were there, the patterns were there, trend was there. We controlled our emotions. We were objective in analyzing the trades and be like, okay, if it doesn't break this level, for example, then we are going to get out. And we did that, and all 5 trades green on a red day, on a solid red day. So the point I'm trying to make is, even when market is bad, even when the market conditions are bad, if you follow the rules I gave you to the T, you will be profitable. All you have to do is follow those rules. And we saw a live example on a super red day, not even on a green day when market was good for trading, like Friday, market was good for trading. Everything was going up. If we were to do on that day, it would have been a different story. No, we did that on a super red day where everything was tanking, and we still took 5 calls and we still made profit on every single call, not a single loss. And that is what I'm trying to stress here, that if you follow the rules to the T, you will make money. It's just that simple. When you lose money, it's because you broke one of the rules. And I'm not saying that you will be 100% profitable, because we're not gods. We don't know the future. And there will be times where market just tanks and things go against you. It happens. Nobody is perfect. But if you follow the rules, you will survive those losing trades and gain big on the profitable trades. So I just wanted to go over the overall market for this month quickly and the previous month. This was our August trade log. Overall good, we did about 76 trades and 91% success rate. This month we did about overall 73 trades and almost 85% success rate, which is still good given the month we have had. 85% success rate is damn good. If you take 10 trades, 8 trades worked out perfectly fine. Now on those 8 trades, if you made 30% profit, you made about, and the other 2, if you contained your losses and keep those losses small and didn't get greedy and follow the rules and stop losses, it worked out. You ended up the whole month green. And that is what I'm trying to stress. So let's go over this month's trade log. So first week, as we saw here, was pretty much the consolidation week, where market didn't do much. We still managed to take some trades, and it kind of slowed down, but we were still taking about 3 to 5 trades, 3 losing trades. We followed the stop losses on one of them on the Twilio. This shop was, these 2 were fairly cheap. So it was kind of like, all right, it's fine. It's not that big of a deal. Both of those went to 0. We should have followed the stop losses on those, but we did not. And that kind of hurt us, but not too big of a deal. I forgot to do this here. Oh, and okay. But we made good profit on the one that worked too, so that kind of worked out. The Snap made about 112%, 87% again on Snap. So if you managed your position size, your trade size, this losses would not have hurt that bad. Week 2 came around and it was still all right. So September 1st. And then September 7th, this is the week where it was okay the first couple of days, and then market started trending down towards the, and on Friday, it pretty much sold off big, this huge red candle. So on Friday, as you can see, we tried to take a couple of autos. It didn't work. We used stop losses, and we got out at about 82% and 38% losses. The other 2 we made about 50% gains on the Google and MDB. The other days of the week were pretty, as you can see from the chart, it was a slow day, consolidation, choppiness. So we pretty much tried to contain it, focused on 1 or 2 names. FB was the one that was running at that time where it almost touched 380. So that's where our focus was, and FB and Amazon, and that's what we traded pretty much entire week. FB, Amazon, and Google were the star of the show, and we made good money on that. So that was the week 2. The lesson or the note that I see here is basically lotto calls. For lotto calls, we have to be quick or not take expensive lottos. For example, Amazon, $4 lottos, $400 lottos is a little bit too much, in my opinion. And we shouldn't be taking those type of lottos on on a bad day when market is going down. So this is one of the rules that I'm going to put for myself, that pretty much no lottos when market is red on Friday, or no expensive lottos. That way, that's one of the lesson, or one of the way we can uh, keep our losses contained on a bad day, because especially on Friday, it can go south very, very fast, because you're basically running against time itself. So for example, let's just talk about Amazon. It was a 35.30 calls, and let's just say Amazon was hovering around 35.10 at that time when we bought it. After 2 hours, even if Amazon is still at 35.10, your calls are probably worth nothing, because the theta decay during that 2 hours is going to kill the premiums. For lottos to work, there has to be big moves in the direction you want it to move in shorter period of time. So even if Amazon, let's just say when you bought it, it was at 35.10, and by the end, this was at 9 a.m. So by the end of it, let's just say by around noon or 1 o'clock, when like right before the market was about to close, those same the Amazon is, instead of 35.10, it went up about $15, and it's now at about 35.25. Your 35.30 call still will be worthless, even though Amazon is just $5 away, because you don't have time. You ran out of time. So you're running against time. Literally, you're running against time when you're playing lotto on Friday. So you have to be quick. Get in, get out, get in, get out, like 10, 15, 20 minutes. And when you buy expensive call, it's very hard to do that. So if you're not quick, if you don't know what you're doing, it's going to get hard, and you're going to lose money very, very fast. And this is why I tell everybody who joined that do not play lotto if your account is one small. Anywhere, anything less than $20,000 or $15,000, I would say don't play lotto on Friday, especially. And if you don't have any experience playing lottos, because if you're new, if you haven't been trading for at least a year, you have no business, absolutely zero business trading same day lottos, because you have no clue how any of that works. You have no clue how the price movement, underlying stock movement will be affecting your premium. You have no clue what kind of move it needs to make for you to be profitable. You have no clue how any of that works. So if you're newer to options trading, like newer than a year, then you have no business trading lottos on Friday. Trust me on that. You will lose more money than you will make it. And at the end of the day, it will be a loss. And if you're not careful, you will blow up your entire week's profit plus more, if you don't follow this. And I have seen this. People have reached out to me from our room where they're like, I had a great week, I made so much profit, but then I got greedy on Friday and keep averaging down and lost all of my profit from this week plus last 2 weeks. So be very, 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 very careful if you do decide to play lotto. Against my advice, if you're new, be careful not to put too much money into it. If you just want to experience it, and let's just say you made $2,000 or $1,000 this week, and if you want to experience playing lotto, that's fine. You can buy a dollar lotto, like $150, $200 at most. So if anything, you will lose, instead of your $1,000 profit for this week, it will be $800, and that is fine. For those $200, you learn something new, you experience something new, and that was worth it. But if you are going to open a $2,000 position, you're going to lose your profit plus more. So trust me on that. Don't get greedy. I have seen this over and over and over and over again, where people just can't help themselves and play lotto and big lottos and lose big. It's just pace yourself. This is a marathon, and you don't want to just go at it all guns blazing, because you have no clue who's against you and what this lotto means, how the premium moves on Friday. You have no clue, and if you don't understand this stuff, you have no business playing it. So just avoid it. What's the worst going to happen? You're probably going to lose some of the money or potential profit. It's fine. For example, when what was it? I think I didn't put it in here. Or was it week 2? Or I think it was probably week 4. This Amazon calls, where we'll get to it. So that was pretty much week 2. This Google calls were not lottos; those were for next week, and it did go over our buying price all the way to 7.5 after, but we didn't. I wanted to take chances, so I sold it early for about 40% loss, and that is fine with me. I followed my rules. I took the loss. It could have gone either direction. From that point on, it decided to go up, and that's fine. I followed my rules, and that's the end of it. You shouldn't be sweating, oh, I should have done that, or if I would have done that, then I would have made money. You shouldn't you shouldn't fall into that trap, because at the end of the day, you followed your rules, and that is a good thing, because in long term, those rules and you following those rules is going to save you from making bad account destroying mistakes. Options trading, a lot of people don't understand this, is very, 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 very different than stock trading. Stock trading is black and white. Buy low, sell high. If it's lower than your buying point, you hold on to it if you want. For years and years, I've seen people hold on to position years. There's an opportunity cost associated with it, but that's beside the point. It's basically black and white. You buy low, sell. It's not rocket science. Options trading, on the other hand, has a lot of moving pieces. And you all know that by now, like different Greeks, expiration date, premium prices, this, that, so many stuff. So what I'm trying to make here is that you need to follow the rules. Without rules, you will be lost. And if you're lost, you will be losing money. And I, for one, don't want you to lose money while you're part of the TRADEORE. That is my job, to make you and give you all these rules and guide you and stop you from making all these mistakes. But for that to happen, you have to listen to me, and you have to write down everything that I'm telling you, like don't play lottos on Friday, and follow it. If you follow the rules, it will work out. Even if sometimes you take a loss and it goes up, it's fine. You follow the rules. You follow the plan. That is the most important thing here. Everything else, it could go either way. Nobody knew. I didn't know it was going to go to 7.5. So I took 40% loss and saved my capital. If it were to go to 0, then I would be like, oh, I did a good thing following the rules and stopped out. So it's like that. And then week 3 came. This is where, let's see where market was in week 3. And that is from 13th. So sideways, good range in both directions. So 13, 14, 15, 16, and on Friday, it pretty much tanked. But for entire week, it was sideways, trading from about 443 to 449, in that range every day, going down and up, going down and up, going down and up, pretty much. So it was in that range until Friday, and we took good advantage of it. We took some good trades, especially in MDB. MDB was working great during that time. It was bouncing between 480, 490, to about 510, and we took advantage of that, playing it again and again and again and again. One for about 8 MDB trades pretty much that week, and almost every single one of them worked out except this one. So very high success rate. We make good money on MDB, about 60%, 23, 37, 17, 31, 38. So good returns on that, even 160. And then we played Amazon. And so we focus on some of the usual names that we trade beside the MDB as well. 2 of them didn't work out. One was Snap early in the week. Snap is a little bit tricky. You have to give it some time for it to work out. And that's what I used to do. I would usually buy 2-3 weeks out on Snap and it would work out. But lately it has a good range. So that's why I started playing the same week calls. So for that week, we only took Snap about 3 times, I believe. One didn't work, but then we kind of made up for that 70% trading here, 52, and then again for 61. So we kind of made up for that loss. We got our money back from Snap that way. But overall, it was a good week. Only 2 losing trades. We played lottos. It was a 90 cents and not that big of a deal. And that's it. I let it go to 0. That's fine. You should have followed the stop losses, but it was cheap, so not that big of a deal. The other 2 worked out great. So that was a week 3. Nothing too major happened during that time, two losing trades. And then come week 4, which is, so this was the Friday, September 17th. Week 4 rolls around, and September 28th, it opened super low, and then broke below the 100-day SMA and reclaimed it. And then around this time, I think on Tuesday or Wednesday evening, I said, we are at a point where we should see a good bounce. One, because market has been in this downtrend and dropped drastically in one day, and it bounced off of 100-day SMA and reclaimed it. And that was a good sign. So I for a shorter period of time, and it worked out great. The entire week after that was markets decided to go up back to about 445 level, and that reflects in our trade log. Every single trade worked out except this shop one. Shop was weak, but other than that, all the other names were working out nicely. Most of the trades that we took returned good profit. Really good week for us. And this is the lotto for Amazon that we bought it at 450. Sold highest sell was about 625, and this was the call that went to 50 cents. And I said, you guys could buy it. Some of you bought it at like about 58 was the lowest I can remember that you guys told me. So lowest was 58, and after it touching the 58 and you guys bought it, this calls went back to $10, almost 1600% gain. Now, if you were to avoid buying it here with me because it's expensive, then you followed your rules, worked great. Because after I bought it and I sold it, it went to 50 cents. Now, when I said, okay, you can buy it here, now the calls are in your range. It's in your buying range. It's cheap. You buy 2, risk $100. Those goes to 10. You turn $200. I mean, $200 to $2,000. And even if you don't wait, obviously you're not going to wait until then. But even if you make 300, 400 profit, it's fine. So if you really want to play lottos, avoid taking calls that are like $4 or $5 because 1, your account size doesn't support it. 2, your experience doesn't support it. You have no clue how it works. I bought it and I sold it for 42%, and I was happy with it. I wasn't aiming for 100 or 200 or 300% because my experience told me that this was as high as it's going to go for that time frame. And if I wait on it, this is going to tank. And it did. It went to 50 cents. At that point, nobody knew it was going to go back to $10. I would have sold it a long time ago. But when the buying time came for a smaller account at 58 cents, that is when you take a little bit of risk. That is when you risk $100 in hope to make double your money probably and make another $100 on top of that. And that should be your goal, not turning like taking $4 lottos and turning it into I don't know, $600, $700. No, that is not how you play lottos when you don't have experience or when you don't know what you're doing or when your account doesn't support it. The way you play lotto is that's how, where it's cheap, where you only risking $100, $150, not $1,000. So keep that in mind. Avoid it altogether or play very, 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 very small where it's not going to destroy your account if it doesn't work. Most people don't do either. They go big, and then when it goes down, they average down and go even bigger in hope that it will bounce back and they will recover money. But they don't realize the whole mechanism underneath the lottos and how it works and how you're literally racing against time. So keep that in mind, and this will save you a lot of money and a lot of grief. But that week was fantastic. No notes over there. The market worked out great, only one losing trade, and that was it. And then comes the last week, and this is where it is. So after topping out here, this was Friday, and Monday was okay. And then boom, huge red day. And then Wednesday was okay. And then huge red day again, and market bro like went back to this lows again. And on Friday, kind of bounced back from there. And like I said, we still don't know which direction it's going to go. So we'll have to see, but not a good week to trades. And that also reflects in our trade logs. On Monday, like I said, it was an all right day. We took about 6 trades and most of them work except this MDB. And that was my mistake here, that I did not follow stop losses. And that one of the reason for me to not do it is because MDB was making huge moves, like $20, $30 moves. And then after Tuesday, it dropped so much that there was no hope for recovery. In hindsight, I should have sold it around $3 or $4 on Tuesday and followed my stop losses. So this is going to be lesson number 2 for me for going further. I'm going to keep this in mind with that when week is tough, take the money out. Now, this is not something new to me. Stop losses is a tricky business. And after about almost 8-9 years of trading in this market, I still make mistakes. I still don't follow them. And sometimes it results in good losses, but it's part of the game, right? So I did losses here, but on the same day I made about 70% gain on Google, Amazon again. So it kind of like made up for it really nicely. Didn't need to worry about it. Now, if you were to say have $10,000 account, you have no business trading any of this except the Snap one and maybe this Google one, because Google was working great the other day, and especially on that Monday, it worked twice and it was strong on that Monday. But other than that, you had no business taking any of these calls. And that's just the end of it. And Snap, I have another note here. Taking risk off the table at the end of the day was a good move because market and Snap along with it tanked the very next day. So come Tuesday, entire market tanked. So when I opened position as 169, it went to like $1 and then bounced back up to 173. And I was looking at the chart, I was looking at the overall market, and one of the rules for me was that I control my market exposure. So I had Google open, I had Amazon open, market was showing sign of weakness. So I was like, you know what? I'm going to close as many positions as possible on this very same day. So I closed Google, I closed Amazon, I closed Snap, half the position, pretty much break even. So at the end of the day, the only thing I had open was half a Snap and MDB. And that kind of worked out great because next day it completely went to shit. So market exposure is another thing that you guys need to be very, very aware about. That, okay, if you have a $10,000, out of those $10,000, you shouldn't have more than $3,000 in the market at any given point. That's 30% of your account, and that is more than enough. So let's just say entire market the very next day dropped 20%. At most, you're going to lose is 30% of your account, not 100% or 60%. Now you have that 70%, and you be patient, you careful, maybe in 2 or 3 weeks, you'll be back to like 100%. That is the point I'm trying to make. Market exposure, controlling the market exposure, very, very important. So that's what I did at that point. I was like, okay, this is getting very heavy on my end. I have too many positions open, too much money in the market, and overall market signs are telling me that it's a weak market. So I'm going to take my money out of it. And that's what I did. And that's what you should be doing too. See, being a trader is not just about buying and selling and making profit. It's never that simple. You have to look at the overall picture. You have to, and also I put this in one of my rules as well. Like, look at the overall market. I'm telling you, I give market commentary every morning and in the trade log as well. So do you read that market commentary? If you read that market commentary, and if I mention like market is not looking good, it could go in either direction, it's been choppy, it's weak, that is your sign to be very, very careful in any take you take. So if I were to be you and I have about $10,000 to play with, I would be like, okay, he's saying the market is weak, what should I do? I'm only going to open one position at that time. I don't care if other people are making $1,000, $2,000, $3,000, $10,000, $20,000, $40,000. I don't care. I'm going to open one position at a time, and my goal is to make sure that that position returns me some profit, not 100% profit. If you open a position and let's just say you make $200 a day, and that would be the end of it. What happened over there is that you contain your risk, you make sure that you didn't lose any money, your capital is safe at the end of the day, and you made $200. Now, if you repeat the same thing again, at the end of the month, you're gonna walk away with $4,000. It adds up. You don't have to make $4,000 in one go. Now, $4,000 on a $10,000 account, that's a 40% gain in your account in 1 month. And you did that by taking very, 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 very small amount of risk. One trade a day, $200 return. Even $100 will give you 20% return on your investment over the month. Your $10,000 account at the end month will be $12,000. And 20% is a very good return. Most people don't get that anywhere else. Most people don't make that. Hedge funds make around 20% a year. So you don't have, the point I'm trying to make is that if you read me say that, okay, market is tough, If you look at the overall condition, the market, do your own analysis, look at the SPY chart. And if you're looking at it were to be me, and let's just say I'm right here, and this week, and I'm like, okay, overall trend is pretty weak here. Maybe I shouldn't be taking that much risk. Maybe I will take it once it changes the direction and go over this this resistance of 448. That's when you start taking more risk. But for now, I'm going to take one trade at a time, try to make $100, $200 a trade, and that will be the end of it. What you don't want to do when market is bad and when market is bleeding is lose money. You have to keep your capital. You have to have ammos for good days. When market is good and you don't have any money, you're going to regret making these mistakes and taking this unnecessarily huge amount of risk and taking this unnecessarily huge trade. If you have a $10,000 account, you have no business, absolutely zero business taking this $1,600 call, because that's 16% of your account. And I'm sorry, I know I'm saying the same thing again and again and again, but people make this mistake. It's a very simple concept. Trade your account size. It's that simple. This column right here, it shows that you have a $10,000 account size. Your $700 is the max position size. And if you were to follow these rules and take the trades based on this, you would have walked away with $3,600. And that after all these big losses. If you follow the stop losses, your $450 loss would probably be 250 or 300. This 270 would be less than that. All this big losses that I'm showing you here would have been less than that, and it would save you money. But the point I'm trying to make is that even with all this losses, even with every single losses that's here, you would still walk away with $3,600 in profit. Let's just say you didn't take most of the position. Let's just say you took only some of the position. You will still walk away with $2,000 just by following the rules, not taking any extra risk. You would still walk away with $2,000. That's 20% of your $10,000 account. You do not need to take $1,600 positions to make that money. And when people tell me, it kind of boggles my mind that why are you taking this huge amount of risk on your smaller? People don't understand risk. Risk management is very, very, very important. And I'm not here. It's just that when people make same mistakes over and over and over and again, and then don't listen to me and don't follow the rules, you are going to regret it. When 85% of the trades we take works out and you still lose money, you need to ask yourself, what is something that you're doing wrong? And I promise you that it will be that you're not following the rules. You're taking too much risk. You're risking way too much than you should be. You're not following stop losses. You're taking the trades you shouldn't be taking. You're taking lottos. You're throwing away money, literally. Ask yourself, is it worth it? $1,600, let's just say you were taking this $1,600 Amazon call, or $1,100 Google call on your $10,000 account. Ask yourself, is it worth losing 10% of your account to make $200 or $300? Is it worth it? No. That should be the answer, and you should be following. But that's beside the point. I hope you guys understand the importance of this point that I'm trying to make here. But okay, so back to the trade log. Week 5, first day was good. The second day, when market tanked, we started taking the next week calls, because when market is going down, you need to give your positions a little bit of time to recover, just in case it goes down more. And that's what we did with FB. Google worked out perfectly fine. Why is it showing? This positions, I think, is still open. At least half of it is still open. But yeah, Google FB worked out great. Shop was sort of like a gamble that we took. It didn't work out. Should have followed the stop losses, but small. I kept the position as 1/4 of my usual size, small position because of the market condition, and it says there. So I didn't mind that it didn't work out. And on Wednesday, we took one call on Amazon, and that worked out okay. Again, I sold it for about 11% profit. And why did I do that? Because, well, market condition, right? Like you have to follow the market condition. You have to look at the overall market condition and analyze, is it worth holding overnight? And something told me that it's not. The market is weak. I shouldn't be doing it. Even though it's next week expiration call, I got out of it. And that was the end of it. I think we still have one position open in Amazon that we opened on Thursday. We didn't take any call on Friday. Friday was 1st of October, so it's not part of this trade log, but we took 2 trades on Friday and both of those worked out. Friday was a good day, so hopefully we'll see some sort of bounce from here coming next week, especially if government reaches agree on a deal to raise the debt ceiling. That would be a hugely positive catalyst for market, and we could see it bounce back to about 445 and over that to 449, but only if we get that positive catalyst. If we don't get that, you can expect more downturn or sideways choppiness here. So again, going into next week, don't go all gun blazing. Evaluate the rules, write down the rules, analyze your positions, analyze your trade logs, see where you made mistakes, correct those mistakes. Have a list of rules right in front of your computer as your wallpaper. That's what I used to do whenever I traded, and now I have it written on a piece of paper and I hang it over my computer screen. So even though I know all the rules I have memorized it, I know them all, but it's good to have it in front of your eyes so that you don't slip. You look at it and, oh, it's fresh, you know. Do what you need to do, but make sure one thing, that you're following the rules, because without that, I guarantee you, even with 90% of success rate, the other 10% will blow up your account. And we did 85% success rate this month when market was going down. Now imagine how we are going to do when the market is going up and how well we're going to do. And we're going to do that by following the rules, by taking good trades, quality setups, analyzing overall market condition, and most importantly, following rules. So if you have any trouble understanding rules or have trouble following them, reach out to me. Tell me why you were having trouble following certain rules, and we'll work on it together. I'm here to help you, but you need to analyze yourself, your trades, and figure out what you're doing wrong if you're not making money, right? Because with 85% success rate in this market condition, you should be making money. And that's it, folks. If you guys have any questions, feel free to unmute yourself and ask me or write it in the chat. I'm more than happy to answer it. We have about 6 minutes left. Not that it's a deadline or anything, I'm just saying.
Hi, I had a question. So do you post all your trades like, is it going through the discussion channel, or is it like when you take a position, you post it in your specific channel?
Yeah, it's the live trading options channel where all the trade goes and all the alert goes. So that's the channel where I post all my trades, all the entries, exits, and even the advice and reasoning behind it. Like, for example, if I'm taking small position most of the time, I put it like I'm taking small positions or I'm front loading it, meaning that I'm getting in it ahead of time, so you guys have time to enter in it. So all sort of commentary goes in that live trading options.
Okay. Yeah, because like I'm not full time, so I'm also trying to, like, I get pulled into meetings and then I kind of have a lot of these messages to go through, and I'm like, okay, that trade has moved on, so I don't usually jump into that. So I usually look at your channel and I have a notification on that one. So then at least I know when you have posted something, and then I try to, like, if I read it immediately, I try to buy that at that point.
Okay, yeah, and it's fine. Most of the members are part-time, so it's completely understandable. For your case and for everybody who is part-time, I will say that analyze the market, overall market, and if, for example, the market that we have had last week, if it's something like that, then don't take the same big expiration calls. Take next week. That will give you more time to enter and exit in a trade, so you will have more flexibility. So, for example, if you get pulled into a meeting, you enter the trade, you enter in trade, and you go to a meeting, and you come out, and it's not like, oh, it completely turned around or it's made a 180-degree turn, right? It will have more time for itself to work out, like, so you will have more time to enter and exit as well. So take the next week expiration call in that sense, or trade. When I was trading part-time, I was trading basically only on green trades. So if market is green, that is one signal that I would wait for to trade, and I only trade Monday through Wednesday and not take any trades Thursday and Friday, because usually you have to pay very, very close attention to those trades, and you have to enter and exit fairly quickly. You have to make those decisions. So for example, you enter in a trade and you have to go to meeting or take care of some work, then it might have turned that trade like in opposite direction than you wanted to go to. The rules that I was personally following when I was trading part-time. And then it helps out, because if you miss an exit, if you enter in a trade on Monday and miss an exit on Monday, there's a higher chance that you will have a chance to exit out of that trade on Tuesday or Wednesday. But if you enter on Thursday or Friday, it's almost impossible that if you miss the exit, you're probably not going to get it again.
Yeah, that makes sense.
Yeah. So yeah, so analyze your situation, your timetable, and then based on that, make some of your personal rules like this. This is just an example based on what I was doing, but you can make additional rules for yourself based on your condition, right? So,
yeah.
And I will try to put more trade-related commentary. I've been thinking about it in the live trading options channel, so that people who are not going through the whole discussion, they still gets the update for that particular trade in the channel itself.
Okay,
so
yeah,
I'll try
thank you.
to do that.
That'll help.
Okay, definitely. Any other question? All right. If you don't have any questions, yeah, go ahead.
So like what happened this week was, so because I don't get into all the trades that are posted, right? I get, depending on my account size, or like if I'm familiar with the stock, then I get into that trade. So which is why I got into, I guess this week I picked all the bad ones, and I was like, oh my God, what am I sitting with?
Yeah. This week,
So I mean, what like it's I don't think it's possible for anyone to get into all the trades.
yes, definitely not.
Strategy to um,
Um, so yeah, you're right. It's not possible for everyone to get into every single trade. It's just not realistic. Um, so the way you can do it is basically one way to do it is follow this rules. So make yourself, I don't know your account size. Let's just say it's $10,000. So based on that, you're like, okay, I'm going to only enter in a trade that's less than $700, right? So if you make that rules, for example, this week you would have entered in only 4 trades, and if you follow the stop losses, it would be 3 wins, 1 loss, about $250, I would say, or even $300. You would still not walk away with huge profit, but pretty much break even, right? And break even is still good on the week we have had. Same thing on week 4. Like if you follow that rules, you're not taking every single trade, as you can see. Like only the trades that follow into this condition, $700. So 1 on Monday, 2 on Tuesday, and then out of 5, only 2 on Wednesday, things like that. And even if you miss some of them, let's just say on Tuesday you took 1, or you're not too confident in Amazon, or you're not too confident in Facebook, you miss some of them, you still make good returns. So this is one way to go about it, right? So based on your account size, and this is what I was saying earlier as well, that this should be your number one rule to decide which trade you want to enter and which trade you want to avoid. And that is based on your account size. Now, my account is big, so I can take any trades that I want. I can take even $4,000 trades, $4,000, like $40 premium calls, and let it go to zero, and I'll be fine. I wouldn't bet an eye. That might not be the case for you or anybody else, right? So the number one way I would suggest for you to pick which trade you want to take and which trade you want to avoid is based on this condition. Look at your account and then decide 700, 800, 600, even $500. And you can go back, if you have time, you can go back to this sheet or any other sheet, like for August or month before that. And even if you take the smaller trades, it will work out great. So for example, let's go through August, right? So August, same thing. If you were to take only trades that follow in that range, then you're not taking every single trades, but you're still making decent amount of money. Now you remove, oh, sorry. Okay, now if you remove some of this, right, or most of it, you're still walking away with good amount of profit, right? So I removed a lot of it, and it's still walk away with $4,600. Let's just say you still miss more, you will still walk away with $3,000. So the point I'm trying to make here is that pick the trades that fits your account size, number one. And number two, even then, you still don't have to take every single trade. Avoid taking bigger trades because it's just not worth it. Like I said, ask yourself, like $1,700 position for me, for my $10,000 account size, is it really worth it? At most, I'm going to make what, $400 profit. Am I willing to risk $1,700 to make $400? Probably not, right? It's too much risk for too little profit. So that's number one criteria that you need to look at. The other one is you can pick based on your availability. Like I said, only trade Monday or Tuesday, or Monday, Tuesday, Wednesday, and then avoid taking a lot of calls on Friday, or starting Wednesday or Thursday, take next week's calls only. So you can layer on top of it. So number one rule, 700 max position size. Number two rules, only trade Monday, Tuesday, Wednesday. Number three, if I do trade on Wednesday and Thursday, it will be for next week. So this will filter out a lot of bad trades for you that will destroy your account, right? So for example, because I followed these rules, I did not take a MDB, and that saved me $880, right? So it filtered out a bad trades. I did take shop. If you were to follow the stop losses and sell it at like about $1.50 or $2, yes, you would lose some money, but a good trade will make up for that trade, and it will be fine. So for example, $450, yes, I lost that, but these two trades made up for that, right? So I ended the week break even, and that's fine. It was a bad week. It was a bad trading environment. If you ended it the week break even, that's still a win, right? So that's the thing. But if I were to add 880 here, then it would have been a very bad week, right? Because now your loss all of a sudden is, instead of 450, is almost $1,200, $1,300, and you're gonna need a lot more than 2 or 3 trades to recover that money, right? So this right here is a very, very important rule, and it will also enable you to take big trades eventually. So for first 2 weeks of month, you follow this rules, and let's just say you're in $2,000 or $3,000 profit, right? So instead of 700 at that time, you can start taking $800 positions, because you're in a profit. You can increase the amount of risk you take by a little bit. But if you're in $2,000 profit and you start taking $1,600 positions, that's not a good idea. But 800, even 900 pushing it, it's still fine, because you've been doing great, you've been following the rules, so it's fine taking a little bit of extra risk. And if it doesn't work out for 1 or 2 trades, you go back to your original size and build it back again. So stack these rules on top of each other, and it will filter out a lot of bad positions for you, and a lot of big losses for you, more importantly. I hope that answers your questions.
Yes, it does. Thanks so much.
You're welcome. Any other question? All right, guys, then I'm going to go ahead and the meeting. Thank you again for joining on this fine Sunday. I know we have had a very difficult month, but hopefully this month will be better. We will get better following the rules, and we will make a lot of money together. Keep at it. And if you have any questions, feel free to reach out to either one of us at any time. We are always here. We are always available to help you out. But just make sure that you have your trade log, because if you are having any trouble with anything, we will go through your trade log together and figure out what we can do to improve your trading and lower the risk and all that sort of stuff, and come up with a plan. But without knowing what you have been doing, it will be impossible for us to guide you what you can do better. Because like I said, if you don't know what you need to do better, it's just not going to work. If you keep doing the same thing over and over again and you expect the same results, that's insanity, right? So keep your trade log. It doesn't take more than 5-10 minutes. Like I take this many trades, and it literally takes me 10 minutes at the end of the day to write that whole trade log that I write every day. So it's probably going to take you 5 minutes to enter that in a Google spreadsheet, right? So take that 5 minutes. It will help you enter the notes, enter your thoughts, and it will help you become a better trader. So please, I highly encourage you to do that. All right. All right, guys. I will see you tomorrow. Have a great weekend and have a great rest of the day. All right.